Welcome everyone to our third webinar in our finance series of leadership excellence webinars. So this one is called Understanding and Interpreting Financial Statements. And if you're joining us from the webinars before, welcome back. And if not, welcome. I'm Spencer Brigham, the Training and Events Administrator for AFOA Canada. I just want to start with this land acknowledgement. So welcome everyone and thank you for being here. I would like to acknowledge that we are on the traditional territory of the First Nations. This land continues to be home to diverse Indigenous peoples, whom we recognize as contemporary stewards of the land and vital contributors of our society. We honor the traditional lands and homelands of Indigenous peoples and communities across Canada, including First Nations, Inuit, and Métis living both on and off reserve in rural and urban communities. And just a bit about me, I am Ojibwe, and I'm from Walpole Island First Nation in Ontario, also known as Bekedronong unceded territory. So without any further ado, I'll pass it over to your facilitator, Joanne.
Thanks, Spencer. Hi, everyone. I see a lot of the names, but just in case we have someone new, my name is Joanne Contan. I'm a CPA and a CAFM, and I've been working with First Nations for over 25 years. I'm saying that because of my age here. Wow. And I'm originally from North Bay, Ontario, Métis from Ontario, and I am part-time CFO and as well as HR for Wata Mohawks, and I'm also an AFOA facilitator. So if you have questions during the presentation, you can put them in the chat. I am aiming to have a question period at the end. So I will share my screen. And again, if you're new, the PowerPoints will be sent to you after the presentation, as well as a survey on the presentation. So when I saw this, as much as I like this topic, I thought, oh my God, how can I just do this in 1 hour? So we do have longer sessions at the AFOA that covers this topic. So I'm going to narrow it down to 1 hour. So we're going to look at audited financial statements, analyzing them and using them for decision making. And if you've been in all the other two webinars, you'll see there's a flow to this and also repetition, and it has been building to the actual audit, and we'll talk a little bit about audits as well. So let's look at kind of a little review. Again, we're starting with the community engagements, figuring out what the community priorities are, getting those in a plan, building a strategic plan. From there, getting department work plans. That's like the verbal part of it, the narrative, but then we also need to match that to the budget, to the funding you have. And those two have to go and support each other. And sometimes I work in First Nation where that doesn't happen. So I will be presenting council the budgets soon, and I have two parts. I have the budgets, but I also have the operational plans to support those costs. From there, once we start the year, internally, we're looking at monthly financial reports. Maybe your council does it quarterly, mine does it monthly, and we are looking at our financial reports to correct errors, to make changes, to make sure we're on budget, to identify any red flags, and to change the course when needed, such as the pandemic. And then we get to the year end, where we get do our year end and do our audit. And we, like I said, we'll be talking about audits and audit opinion. So what's the purpose of an audit? To provide independent, reasonable assurance that the financial statements and any special purpose reports accurately reflect reality. So it does not guarantee that everything is correct. So auditors don't have time to look at all the transactions. So they will take a sample, and that sample will be determined by many things. Your internal controls. If you have strong internal control, that lessens one risk. It'll also depend on, and obviously if your internal controls are weak, that'll increase the risk, so that might increase the sample. They're looking at all sorts of factors to determine the sample. The other one will be how much money flows through and what numbers that you need to look at. So a small First Nation, 5,000 is, 5,000, and for a large one, 5,000 is like immaterial. So they can't look at everything. They're going to pick a sample, and from that, based on what they find, there's going to be a percentage that they will accept as, not perfect, meaning doesn't, somebody missed a step or it didn't get signed or whatever. And I mean, no one's perfect. If it's not significant, there's a percentage they will accept. And therefore, they're going to give you reasonable assurance based on what they get in their samples. And they're doing samples on many things. So what they're saying when they're saying reasonable assurance, that there's no significant errors that would be misleading. That's what they're trying to capture. So we talked about this in the other webinar about financial administration law requirements. And one of the, whether you have this or a financial policy or in general, we are to use GAAP, which is generally accepted accounting principles. And we also fall under the public sector accounting standards. So later you will see some of our terminology is different than businesses, and the way we present certain things is a little different. So we fall under governments. So those are the rules we are governed by. We also need to appoint an auditor annually and to provide us an opinion. So the appointment of that is either your council, or if you have a finance committee, an audit committee, they would do that. And then, and you want to be able to produce also a financial report, not just to provide the audited financial statement, but to demonstrate, to explain what was done during the year. This is our strategic plan. This is what we achieved. So again, I've mentioned that before. It's more than just numbers. You need other things to support that. So there's different types of audits. So a compilation and a review is not what we get. We have audits, which is the last one. And compilation or a review is for small businesses usually, and that they don't require an audit. And you need an audit if you get public funding, if you are a public corporation. Like there's certain criteria where you need an audit. And because we are funded through federal and provincial, we require an audit. And this one, if you look at the procedures compared to the other two, is more extensive, and they test things and they do third-party verification. So the other two, they kind of just go with what you give them. They don't go any further. You pay less, but you don't have that reassurance, right? Like an audit. Third-party verification is they will send all your funders and certain people letters saying, how much money did you provide this First Nation for the year? And then they'll, April 1st, 2021 to March 31st, 2022. And my books might say I got $500,000 from FNIB, First Nation and Inuit Health Branch, but they won't. And I'll have the agreement, but you know how you get little adjustments at the end of the year and all that. They want a confirmation from that third party to say, yes, that that they haven't sent me more, that I'm like hiding under the table kind of thing. So they get third-party verification. The level of assurance is the highest one you can get, which was the previous slide. That the other two, compilation or a review, if you do that for a small, like when I was working for an accounting firm years ago, I did those a lot for small businesses, and I know what they are. So if someone gave that to me, I'd have a lot of questions, because the level of assurance is very low. And the first one, there's none. So it's what they gave the accountant. And then what's the report called? And your concern today is the one we're talking about, the audit, and it's the auditor's report, which expresses an opinion. So what are opinions? So these are the categories: the good, the not so bad, the bad, and the ugly. Obviously the best one is the first one, and it's called an unqualified opinion. And when you have that in your audit, it means that the statements are fairly presented. And if you recall, they can't guarantee everything because they didn't look at everything, but based on what they saw, you're following GAAP. Anything they found, like a missed signature or something, nothing was material, like it was small peanuts, they're not worried about it. If they found, like you missed signatures and all that, that might go in the management letter and say, you need to tighten up on that internal control. But other than that, this is what you're looking for: a qualified opinion. That means the best one. The other one is a disclaimer opinion, where they are giving an opinion on something that there's an area that they have to, they can't really give an opinion about. So there might be a section that they couldn't audit, or there was an error, or they couldn't, if it's inventory. An example I know of personally was inventory, and if it didn't get counted, which luckily was not material, then I might have had a disclaimer opinion. The bad one is adverse opinion. That's not good. So this is when they're not satisfied with the statements, so that it means it didn't follow GAAP, there was no internal controls, or they were so weak. Internal controls, also following GAAP in the sense of when recording revenue and expenses, you have to do it when it happens, not when the money actually flows, that kind of thing. Or they discovered a high level of material misstatements or irregularities. So, when they're doing their samples, you find, oh, we forgot that, there's an error and it's like $5, not a big deal. But this is when these are material. These are big amounts that now you can't trust the audit you're reading, or the statements, because if that big error could happen, there's more. And then the ugly is a qualified opinion, and that's when they can't complete the audit because information's not available. So
we have a
yep.
comment in the chat there from Vicky,
Yeah.
talking about the categories there.
She's right. Did not notice that. Thank you, Vicky Lee. The disclaimer and the qualified are in the wrong categories, because the good one's a unqualified. The second one is a qualified. Totally right. So that is in the wrong spot. Thank you, Vicky. My problem is I do these slides so much, I memorize them, and often I'm talking and it has nothing to do with the slide, and I'm not always paying attention. So that's my fault. Did not notice that. So thanks to Vicky. Unqualified, qualified. Was there another? I think that was it, right? Okay.
Yes.
All right. responsibility. So this is interesting. The auditors have a responsibility. The management has a responsibility. I think a lot of people don't realize management has a responsibility. So what's the responsibility of the auditors? To obtain sufficient appropriate audit evidence, obtain reasonable assurance that the statements are free from material misstatements, perform their audit. So we have GAAP, generally accepted accounting. They have their own. They have generally accepted auditing standards. Obtain understanding of internal control and evaluate accounting policy, estimates, and management disclosure. So they'll ask you for all your policies and ask you all these questions, how you do things, and then issue the audit report that includes an opinion and the date and the city. The management has a responsibility as well. The management, as in really council, as well, issues the report that they acknowledge the responsibility for reviewing and approving financial statements. And I was just looking at a copy of our audit, and it's like clearly there. So council is saying that, yes, we do review them and we approve what you are auditing. Chief and council approve financial statement presented by management. They maintain systems of internal controls of high quality. Again, not their job to figure those out, but to ensure that they're in place. And then financial information is relevant, reliable, and accurate. Assets safeguarding that, that it's still, just because you're getting an audit doesn't mean there's no responsibility on our side to ensure all these things are in place. And then they sign the report to include as part of the year-end audited financial statements. External financial statement components. So earlier I said, we go under the government, PSAB, so the public sector. So one of the big things is just even terminology. So if you're looking at your audit and you have a business or you worked in a business, and you'll notice immediately the terminology is different. So even though it's a statement of financial position, in a First Nation, I still call it a balance sheet. It's just old school here. So a balance sheet, as we know it on your audit, is called statement of financial position. The statement of operation, or the income statement, is a statement of operation. Oh, that's the same word. See, I know these by heart, not by what I'm reading. It should say income statement is a statement of operations. Different terminology, we're still calculating everything. So for the balance sheet, whether you call it a balance sheet or a statement of financial position, they still both balance. Assets equals liability plus owner's equity. Whether it's a statement of operation or it should say their income statement, calculated the same way, your revenues less your expenses. Now, the bottom line's a little different. Again, terminology. If you're in a business, it's like your net income, your net loss, but in a First Nation is surplus or deficit. And then your statement of net asset is combined usually on the balance sheet, and that'll be called, it depends if you're a corporation, it's retained earnings, or it could be capital. Just depends on the how the business is structured. Cash flow statement stays the same, and then so does the notes to financial statements. So those are the big items you have in your audit. Many of you have maybe deal with housing with CMHC. You're going to need a separate audit for that on its own. Many of the funders want their own schedule, so you're going to have additional schedule, but these are like the four big, the main parts to, not four, I can't count, the main components to your audit. But then there'll be additional information, like I said, schedule. So ISC, Indigenous Service Canada, they want their own schedule showing the money they sent you and in detail how it was spent. In detail meaning per line item. Provincially, you might have some funder in the province that will want a schedule just for their their information, and usually it's like an annual, they call it ARR, their annual reconciliation report or something. So there will be additional reports in the audit. So if we look at what a statement of operation is, it's your revenues less your expenses, and we don't say net income or net loss in the government, we say surplus or deficit. The next one is a sample of a statement of operation. So again, what you want, just one column of information is never sufficient. You need a budget, you need the previous year, you need something to make it relevant to see what it means. The kind of bright green column, the first one is the budget. If that was not there, we just had the pink one and we're in the year 2018, 2019, let's say, having a surplus of $1 million really doesn't tell me anything if that's good or bad, because maybe in the past it's been 10 million. I don't know. So these are colored to show you that you need to be comparing it to something to make it more relevant. So the budget is one thing. So this is what you were planning on doing during 2018, 2019. Did you meet your goals? And, you know, and this income statement or statement of operation, the revenue is usually, you will see it broken down, but they're all consolidated there. And then you have all your expenses. And usually this is like a consolidated one. You don't see all the details. And depending on the user, you will have more information. So there's public, when the auditors do the audit, they do a public version and then the detailed one. So if I need to send our audit to a funder, I send them the public one. It has very little details and more consolidated. Whereas internally, we use the other one where we have all the schedules and everything. Regardless, we still have all those columns to assess, but in this example, probably because of space, revenues, usually you have more detail. So we expected 77 million in the first column. We received 88. Now, if we had this broken down in the types of revenues, then we'd have a better idea which funder gave us more money. And, you know, forget the years here. I know we've had an influx of funding because of the pandemic. So anything I predicted that we would get we got more, right? And then you also want the previous year because it reminds you where you were and if you're getting better or worse. So in this example, they were in a deficit of 4 million, and the current year, that let's say we're in 2018, 2019, now we're in the positive. We've earned $1 million. Now we were aiming for 4, so now the questions are why. We know we got more revenue, but where did we spend a lot? So then you go through each line and figure that out. Another thing you might want to look at is in your revenues, which we don't have them separated like federal and provincial and so forth, but sometimes you want to calculate percentage of own source revenue, or how much of my total revenue is federal or provincial or whatever. So there's various types of simple, quick little ratios you can figure out to help you determine things. So when you're sitting, looking, like especially councils or management, looking at, you know, relationships, and especially council on a political level and so forth, sometimes these stats are very useful because you know how much you're getting from them. It helps you make your decisions. The other one is the balance sheet, also known as statement of financial position. Again, the terms are different, but they're still the same thing. So you have your financial assets, and we have a little picture here so you can visualize this, less your liabilities. So your financial asset is what you own, what you have. So your cash, your inventory, your investments, all your capital, fixed assets, your buildings, vehicles, that sort of thing. And then your liabilities is what you owe. So it could be like short term, it could be your salaries, what you owe your vendors, and it could be longer term, like if you have loans, that sort of thing. It could be deferred money. And so assets less your liability gives you your equity. And basically that's the community surplus. So from this statement, there's a picture here of comparing statements. And on the left side is the public, I just blanked out, public sector rules of how we present a financial statement. And the other one is the balance sheet, how it would be done if it was a business. And the purpose of that is to show you that if you're following the colors, it's the same information, but presented differently. And what is important is, let's just look at the left side because the right side is business. What's important, what you want to look at when you're looking at a financial position is the obvious is when you start with the financial asset, look at the cash in the bank. So we have 2 million. Okay, that's awesome. I'd be concerned if the interest was really high because obviously you'd want to invest that, but it's been so low that most people just leave it in the bank. Here they have restricted cash, so they have reasons why they have cash restricted. I know sometimes you do that with reserves, housing reserves. Your receivables, again, an important number to look at. This is, is it going up or down every year, and are we on it for collecting? Now, based on these statements, I think that is pretty darn high, but again, we don't know the story. So the story would be in the notes, which we will get to momentarily. And then we look at liabilities. That's what we owe. And these are examples of types of liabilities. And then the purple, the negative 74 million, is very important. The way your financial statements are presented in the public version compared to the business read a little differently. So if I look at the first one, it looks like we have a net debt of negative 74 million. And the reason, but we really don't, but the reason we do is because the way we present in public sector is we only put the financial assets that are like money, financial at the top, and we have 46 million of that. And then our liabilities is 121, which is way bigger than our financial assets. So it creates this net debt of 74. And the reason I'm just bringing that to your attention is, A, we don't have time to dissect this in a 1-hour webinar, but this is something that ISC looks at when they are assessing your financial position. And then we take our non-financial assets, we add them back in, and we end up with a surplus of 47 million. So we're really not in the hole, but if we had to pay all our liabilities tomorrow, so we have demand loans, if they call them tomorrow and we have to pay our payables and we have to pay, all our debts, we wouldn't have the money. We would not have the cash. Now, on the other side, we have the balance sheet set up in a business format, and we have total assets of 168 million. That's in yellow. And we have liabilities of 121. And when you add all that, I mean, it just does not look as bad as it does on the left side. So the format that we have to use is set up that it gives you a red flag immediately if you can't meet your current liabilities. And I'm sorry, I didn't mean to go this long on this, but kind of hard to do in a 1-hour webinar. Cash flow statement is another statement that you will find. And what it's doing is showing you at the beginning of the year, on April 1st, you have X number of dollars in the bank. And at the end of the year, March 31st, you have whatever amount in the bank. How did it change? Whether it went up or down? And what happened during the year? So a cash flow statement kind of records that. And it has 3 sections to it: the operating activities, the capital activities, and the financing. So this is just an example. And just so you see, the green here are the 3 sections, and the yellow. So in 2017, 2018, your ending cash was 11 million. So you move it up here into 2018, 2019, that's the opening. And at the end of the year, you only had 5 million. So this statement shows, and really you need someone to interpret this for you, how come we started off with 11 million and we ended up with 5? What happened? And this tells you in 3 big categories. Now, notes financial statements, this is the key to answering a lot of the questions that you may have on your statement. So one of the things it does, it tells you what kind of policies you're using, accounting policies. It'll tell you more information on your assets, liabilities. So for example, your accounts receivable, like there was $20 million there. I'm very curious to know who owes them $20 million. So usually it would say see note, like, note 1, you go to note 1 and it'll give you a breakdown of that 20 million. Just like liabilities, there was that big demand loan. Well, I'd be curious details about that, or often you'll have mortgages because of housing. So you'll have an amount, you just go to follow that note, go look at the note, and it'll tell you, okay, you have, these mortgages, they're due or they're ending, in 2050, and this is how much interest you're paying, and these are the monthly payments, that sort of information. So you need those financial statements to really understand those numbers. Just looking at them, you're not going to know. Part of the here they're mentioning the management letter again. This is to identify any weaknesses in your internal controls, recommendations, that sort of thing. I think we merged 2 slides here. So in your notes, it's very important you have that, because without the notes, you can't explain things. I'm just going to look. Someone has something in the chat. Okay. So this is kind of got two slides got cut together there, but another thing too is some of the examples that you might have in your management letter is, maybe the lack of one of the recommendation might be cross-training of finance staff. So I can give you a quick example. My accounts payable clerk is trained to do my financial assistance work and vice versa. So if my AP staff member gets COVID, is off sick, needs surgery, whatever, my other person can do that job. That's very important. It's been very important and relevant during the pandemic, but that's like an example of example that might be in a management letter. And then the other one is, if you had excess cash. They often will do that. They'll say, you know, you should be investing, but right now the interest rate's not there. So analyzing, so management statement responsibility typically includes the audit statement. It's the responsibility of management and they have to be approved by council. So council is responsible for ensuring management fulfills its responsibility for financial reporting and is ultimately responsible for reviewing and approving financial statements. So this has to be clear from the beginning, because at the end of the year, when there's an audit, it specifically states that council is responsible and has been reviewing the statements. So that's, again, super important. Now, auditor's report, it describes, so you might have in your report, it describes what an audit is, what was audited, how it was done, and it'll give you the opinion if the statement was presented fairly. And if it's qualified, it'll tell you why it's qualified. There we go. So the starting point, obviously, for financial analysis is financial statement. So unless I'm working with something current, I'm always using audited information because we're going to be making decisions on that. So you want to make sure that it's information that's been audited. You also want to use, you know, previous years, and you want to use your benchmark for auditing. And we talked about that for auditing. For budgets, we talked about that in the previous seminar about internal reporting, how important it is to use the budget as a form of benchmarking. And then there's other analysis that can be used to understand the financial condition. So in our statement of operation, which is also known as an income statement, we're looking at a surplus or a deficit. We want to see a surplus, but again, there could be a deficit and there could be a good, you know, as long as we know what the reasons are. And could be many things. And I think what we're looking for is we don't want a deficit just because there was no rules, there was no budget, there was no plan. You know, if you have a deficit because of the pandemic or flooding or whatever the situation is, or lack of funding or whatever, that's not acceptable. But I mean, that's one thing. It's what you don't want to see, a deficit because there was no controls on purchasing and no internal controls and that sort of thing. And then you're also looking at the total, and you're looking at the total entity as well. Usually you're going to have a deficit one year, but you have a big surplus to cover that. So it's not the end of the world, but those are the things you need to be monitoring, are your deficits. The statement of cash flow, again, if you're having cash flow issues, this is a statement that you really need to be paying attention to, especially council and management need to really plan and have processes in place to ensure that you can meet your commitments. And then the balance sheet or the financial position, we're looking at net equity, we're looking at debt, and there's nothing wrong with debt. Often you have to borrow money to get a project going, or you know, mortgages is debt. I mean, you need mortgages, you need housing, but it's managing this debt properly and having processes and so forth. And then another, so ISC will look at all of these things, and one thing they'll look at is working capital and liquidity. Can you meet your current liabilities? I see somebody in chat there. Let me just see. ISC looks at a lot of these. So earlier when we were looking at the statement of financial position, the net debt, that's something they're looking at. And what they do at the end of the year, when you send in your audit, they input it and it produces a report that does 3 or 4 ratios. I don't know why I'm blanking out. I usually know this by heart. But one of them is looking at your working capital. Can you meet your current liabilities? The other one they're going to be looking at is the amount of debt based on that format we were looking at. Are you in a, do you have more liabilities than you have assets? So there's several ratios that they will calculate. And when you get that report, it tells you which range you're supposed to be in. So you don't need to know how to, they even show you how they calculate it. There'll be a little star. And if you go to the back page, they'll show you. But what you're really getting is kind of a report that is telling you how much your ratios are and what is favorable or unfavorable. And that's how they determine certain obligations going from there. So if your ratios are not good, there tends to be additional actions taken. And if they're well, then you don't have to worry. And then these would also be looked at from a bank point of view as well. So if you can't meet your current liabilities, it'll be way harder to get money from a bank. So that's another type of decision maker that would want to look at your audit. Variance analysis, again, we're always looking, comparing. Did I already do this? No. We're looking at comparing to budget. We're looking at comparing to the past. We're looking at receivables, liabilities, cash balance, and we covered that in the internal reports as well. But this is what we do internally also can be done at year end with the audit. So at the end of the day, when you have your audit and you're reading your notes, you can identify maybe your receivables are really high and maybe your staff is not making headway at getting, let's say most of it is coming from funders that owe you and they're not able to reach out. Well, these are red flags. So I was saying earlier in the other session, we're doing this monthly to, resolve all issues before year end, because at year end, when council, when ISC, when anybody looks at the end results, we want to have solved those minor things throughout the year. Keynotes to understand, you need to understand that, and I think I said that in the last one, you need to understand what a balance sheet is, your income statements, and AFOA does workshops for leaders on understanding more how to read an income statement, or, well, really, I'll use the proper word, statement of financial position and statement of operations, how to read them. And again, don't be afraid to ask whoever is presenting the information. And also just know how to analyze just general information, like from your budgets and so forth. Decision making. So whoever's making the decisions, I mean, it really depends on the user. So investors, funders, lenders, they will look at specific things. They're going to look at your liabilities. Can you meet those? On the balance sheet, what's your cash? Are you, does it appear you're having issues collecting your accounts receivables? They'll look at the income, the surpluses. Do you have history? Because they often they'll ask for more than 1 year of your audit, and each audit has 2 years. So the current, the year they audited plus their previous year. So if you ask for 2 audits, you get 4 years. So they're looking for specific things. So they want to make sure that this fund will, if they're a creditor, that you'll be able to repay if it's a loan. If they're an investor, they want to make sure that you're going, you know, you're a healthy organization going for the positive, that their investment in your business or whatever it is safe. The funders have their own ones. They're looking, again, specific things, like I said, that report, your debt, your working capital. And then, like I said, everybody has different ones. And then the bottom one is your members. So often members, their concern is, where's the money going? So they can see that. But this is where the annual report is really important, because to me, you can deliver services and programs and meet budget, but you're not really making an impact. You're not, you know, meeting the needs. So this is why an annual report with the numbers makes more sense. And most of you do that, where you get the numbers, but then you also see what was done, what was achieved, what needs to be done, what, you know, so, and stats as well, to help the members understand what they're looking at. Types of decisions, again, audited financial, we might use that internally for growth, for investments, for strategic initiatives. So when you're looking at, you know, planning for the long term, maybe there's red flags through either something discovered from management or council, or something from the management letter that needs to be addressed. There might be red flags that maybe there's fraud. If you have all these internal controls and you're just not understanding why the numbers are not reflecting the activity, that's a possibility. And then you might use the statements to assess management's performance. I mentioned that before. Council's responsible for ensuring there's a strategic plan, and that information goes down to the administrator. And then that person then shares that with management, so that they ensure that all the objectives are in the plans. And that's one way council can assess their administrator's performance, and then the administrator can assess the department manager's performance, and then we as managers can do the same for our staff. So we give them these objectives, and at the end of the year, did they do them? And even if they didn't do them because they couldn't do it, that's not it. I mean, it's not about, again, just delivering. Was it done well? Are we doing an impact? And if you couldn't do it because of the pandemic, what did you do? So those are things you can use to measure people's performance. So examples or questions, again, you can ask your finance functions, the function about audited financials. So where are any control weaknesses identified during the audit? So again, we would know that. Were there any disagreements between management and the auditors? Again, usually you would bring that forward. Were there any control breakdowns or policy breaches? So that I've identified before in different First Nations I've worked with. And then you correct it and you don't see it in the management letter the following year. So that's the goal. Are there any risks that are not, things that aren't being reported? Sometimes you grow too fast, or something new comes into the community and you don't give it too much thought. And then you think, oh, we should have been tracking that. Now it's going to become a thing. That's normal. So again, identifying those. And are there any changes in business or operation conditions that would impact future results? And right now we've been experiencing that with the pandemic, but I think from what we've learned a lot, and I think we can bring that forward in other situations, or I hope we are. So, all right, where am I with time? I am going to stop sharing and open the floor, the chat for questions.
So we have 10 minutes left on the time.
Yes. I could have gone a little slower over the financials. I think in an hour, it's kind of hard to really make a presentation that's not too detailed, or so if there's any questions on that or any other types of questions. So what's restricted cash? So restricted cash is cash that you have that can only be used for whatever it's destined for, that's been identified. It could be several things. One that comes to mind, for example, some First Nations keep a reserve for housing. For CMHC wants, one of their stipulations is that you put money aside for repairs and maintenance, a reserve for future homes, whatever. So you may have that in a separate bank account, and that's considered restricted. And there might be another type of commitment or agreement you have with another external party where you have income from that, but it can only be spent on specific things. Usually it has nothing to do with operating. Hope that answers your question. Crystal wants to know more about, I think, thanks. She wants to know more about the financial administration law, and I think our expert is still on. And if do you have something specific, Crystal, that you'd like to know?
If you'd like, I can bring Catherine on.
Yeah, Catherine didn't know she was going to be participating. So Jennifer just put a link to that. Catherine's here if you, because she works in that. So
Yeah, sure. I'd happy to just add a little bit. And great job, Joanne. I really recognize and appreciate how it would be hard to fit that all into one webinar. So I think you did a great job. Just a couple of quick points, just expanding that circle of knowledge. When we think of our elected leaders, they may have been elected because they're great visionary leaders, but if they may not have the financial background and expertise, they can draw upon other advisors, such as in the financial administration law, there's a section that talks about putting a finance and audit committee together. And that's really to tap into those areas of expertise to help council with those big financial decisions that could have long-term implications for their communities. Another part of the financial administration law has built in internal assessments to help First Nations in their financial management system continue to improve year over year, look at all those different areas where they can get better and better. And I'm just wondering, Joanne, have you ever seen First Nations in their annual reports or even in their quarterly reports coming to council, the use of graphs and images to help convey information to council in addition to financial reports there with the actual numbers?
I have seen it, yes.
Yeah, I think that might be helpful too, just to be able to
Yeah.
visualize, and put things in context, or just it's another way to help convey that information. And then the other part would be just tapping into the, when you mentioned the annual reports a little bit, the non-financial aspects of what administration and council leadership is all trying to achieve in terms of environmental, social, building up people, and cultural implications, the retention of language programs, all of those great things, to be captured in, that are not financial information, but so extremely important. Priceless, actually. Right? Thanks.
Thank you, Catherine. So yeah, I mean, pictures tell a story. Pictures of the projects when you're building something, statistics like Wata has made duplexes and triplex. If we do our annual report, we can put the pictures, we can show even numbers that are on a waiting list, how many we were able to serve, what our future plans are. I'm an accountant and I don't want to see a report that is just numbers. I want to see pictures. I want to see like of things happening. I want to see stats like in a cool little way, and graphs. I mean, nothing tells more a story than a pie chart. Any other questions about anything? And a lot of the things I spoke about, if you go on the AFOA website, we do have some of these topics, especially for leaders or other opportunities, whether it's our upcoming conference. We have workshops and sessions often that pertain to these topics. Any other questions? How many here are not financial people? Just put it in the chat. You are not financial. You could put your position instead. Crystal's working towards it. One's a counselor, my boss. One of engineer. So from what I see, counselor. Nice. So from any of the counselors, you can see your, what you could maybe improve in your First Nation. Ben, administration, same thing. Or your expectations of administration. Administration company. So a lot of you work with budgets. The engineer, I'm sure you're definitely working with a budget. And then I have someone else, administration for a construction company. So I think a lot of this was relevant, maybe not as detailed as some of you may have expected, but an hour seminar, you could just cover so much, but still looking. Yeah, so I always have a mix. How many First Nations get their accounting completed off to the community by third party? Okay, so does anyone here have their accounting done by someone else, a third party, instead of on reserve? Is that what you're saying, Claudine? Anyone? So I know I have my payroll outsourced because the amount. We have our IT's outsourced. Anyone have their accounting outsourced? Like I could see a small business doing that. I would think a small First Nation would do that, maybe. I don't know. You're talking about my trade. I need to see everything. I couldn't outsource that. I don't think anybody does. I haven't seen any answers. We have 1 minute left. Any other questions? I want to thank Catherine for helping me. What you have to take advantage when you have an expert. So thank you, Catherine. Thanks, everybody. Spencer?
Yep. So if there's no more questions, we will end the webinar. So thank you to everyone for attending our finance webinar series, part of our leadership excellence webinars that we're doing. And just a reminder, we'll send out the PowerPoints that were used for all 3 of these sessions, as well as a survey and some additional materials. So and thank you so much to you, Joanne, for facilitating these 3 sessions, and to our guest, Catherine, here as well. So, miigwech, and this concludes our webinar.